I've seen men go from riches to rags in a single breath of the market. Not because the market changed, but because they didn't understand what it demands. They saw prices move and thought that was the signal. They saw others win and thought that was the strategy. But the truth, the market doesn't reward action, it rewards preparation. Every man wants to trade. Few are willing to wait. And that's why most lose before they even buy. I've stood in the bucket shops of Boston, the great halls of Wall Street, and I've watched the same tragedy unfold decade after decade. The names change, the instruments change, but the emotions remain. Fear, greed, hope, desperation, and they all whisper the same poison. Buy now or you'll miss it. I used to fall for that whisper too, until I learned the most valuable truth a trader can ever know, that the best trades are not taken in excitement, but in clarity. Now listen closely, because I'm going to tell you something that could save you from a lifetime of chasing shadows. Before I made a single buy, before I risked a single dollar, I had a test. 5 steps, 5 questions, 5 filters that separated my emotions from my judgment. They weren't rules I read in a book. They were forged in loss, paid for in pain. And every time I ignored them, the market punished me without mercy. But before I reveal that test, I want you to understand why it existed in the first place. Because without the right foundation, even the best system collapses. You see, most traders think the market is a battle between bulls and bears, but that's only the surface. The real war happens inside you. When I was young, just a boy, I memorized price, movements. I could tell you where a stock closed the day before, where it peaked, where it faltered. I didn't have computers. I didn't need them. I had memory and obsession, but obsession can be a double-edged sword, because when you fall in love with the market, you stop listening to reason. You start believing that your talent can outsmart chaos, and that's when the market takes you by the hand and leads you to ruin. There came a time when I realized that success wasn't about prediction. It was about discipline. I didn't need to know where the market was going tomorrow. I needed to know if I was ready to act when the signal appeared. That's what the 5-step test is. A method to filter noise from opportunity. Now, before we reach those steps, let me tell you a story about the day I almost lost everything. It was 1907, the panic. The market was in chaos. Stocks that had been soaring for months were now falling through the floor. Men were panicking in the streets. Brokers were shouting until their throats went raw. I had been short the market heavily, and as prices collapsed, my fortune grew larger than I'd ever seen. But in that euphoria, I made the same mistake that countless traders still make today. I believed the move would never end. I covered too late. Then I went long too early. The same system that made me rich became the weapon that destroyed me. When it was over, I had lost millions. But that loss gave me something more valuable than money: clarity. It forced me to build the 5-step test. Because I realized no matter how experienced you are, the market can still seduce you. It can make you see what isn't there. It can make you act when you should be still. So if you take nothing else from my life, remember this: the best traders are not those who act fast, they are those who wait with intention. Every great trade I ever made was the result of waiting for confirmation. Every failure came from acting in anticipation. Now here's what most of you do. You open your charts, see a breakout, and jump in. You think, it's moving, I'll catch the wave. But waves don't care if you're ready. If your timing, psychology, and preparation are off, even a perfect chart will destroy you. That's why I built the 5-step test to protect me from myself, and I'm going to share it with you. But before I do, I need you to understand the mindset behind it, because that's where 90% of traders fail. See, most traders think trading is about analysis, charts, indicators, setups, but what they miss is that analysis without discipline is gambling in disguise. I didn't trade because the market looked ready. I traded because I was ready. My preparation was simple. When the market gave a signal, I had already decided what I would do before It happened. That way emotion couldn't interfere. And here's something few will tell you. Patience is a position. Waiting doesn't mean you're doing nothing. It means you're aligning yourself with the rhythm of the market. You're allowing the crowd to show its hand before you show yours. If I could give every modern trader one gift, it would be this: the ability to wait without losing conviction, because the market doesn't pay you for how many trades you take, it pays you for how well you wait. Now, let's talk about reading the crowd. In my day, I didn't have moving averages or oscillators. I had the tape. Every tick, every trade, every fluctuation told a story. The tape wasn't about numbers, it was about behavior. When a stock hesitated near resistance, I could sense exhaustion. When volume dried up, I knew the big operators were finished buying. When prices moved without conviction, I waited, because the tape, like the market itself, has a voice, and it only speaks to those who listen long enough. You. Modern traders have screens full of indicators, but you've lost the art of observation. You look for signals instead of stories. But every price tells you a story of fear, greed, and uncertainty. The secret is not to interpret it, but to let it confirm what you already suspect. And that's what the 5-step test does. It turns your suspicions into structured patience. Before I explain it, remember this. You don't need to know what's going to happen. You only need to know what you'll do when it happens. Now, the philosophy is clear. Trading isn't a guessing game. It's an exercise in self-control. The market rewards those who are prepared to do nothing until the moment is right. And when that moment comes, you don't hesitate. Because the perfect entry point isn't about perfection. It's about confirmation. That's where my 5-step test begins. Each step removes a layer of uncertainty until what's left is a clear, calculated decision. A decision that's not made in emotion, but in evidence. So listen carefully, because what I'm about to tell you is the same process I used to build my fortune, and it's the same process that can save yours. Now listen closely, because what I'm about to tell you isn't theory. It's the process that stood between me and ruin. Every time I followed it, I made money. Every time I ignored it, I paid the price. This test isn't about predicting the market. It's about confirming readiness. You'll notice every step removes guesswork and emotion until there's nothing left but truth. So here it is, my 5-step test. Before every buy, step 1, the line of least resistance. The first step is direction. Before I bought anything, I asked myself one question: is the market moving with me or against me? Most traders buy because a price looks cheap, but cheap is a dangerous illusion. Stocks are never too high to buy nor too low to sell. If they're moving along the line of least resistance, that line is invisible to most, but you can feel it if you watch long enough. When prices rise and pull back slightly, then continue upward, that's strength. When they rally but fail to make new highs, that's weakness. The line of least resistance is simply the path the market wants to go. I didn't argue with it. I aligned with it. Think of it like a river. You can't fight the current. You must flow with it. If the market's general trend was up, I only looked for long opportunities. If it was down, I only look for shorts. That sounds simple, and it is, but it's where most traders fail. They want to be right, not aligned. So the first test was, is the general market trending in my direction? If not, I did nothing, because trying to trade against the market's momentum is like rowing upstream. You might move for a while, but you'll exhaust yourself before the river does. The crowd always shows you where the pressure lies. Your job isn't to resist it. It's to recognize it and ride it. When a stock and the general market are both moving upward, that's your first sign of strength. When both are falling, that's your first warning of weakness. This is step 1, establishing the direction of the tide. Step 2, confirmation by action. Now that you know the tide, the second step is to wait for confirmation by action. I never bought just because prices were rising. I bought because prices proved they could continue rising. There's a difference between a move and a move that matters. In my day, I watched the tape. Today, you watch the screen, but the principle is the same. You must see the market prove itself. If a stock broke through resistance, but immediately reversed. I waited. If it broke through, held, and then advanced, that was confirmation. Price must show its strength. You see, the market is a stage and every price movement is an act. One act doesn't tell the story. You must see the sequence. I called this confirmation by action, not by hope, not by indicators, not by what some operator whispered, but by what the price did. If the price action confirmed strength, I knew the insiders, the big men, the strong hands were active, and when they're active, you follow, not led. So, the second test was, has the market confirmed my direction through action? Not words, not analysis, but movement. If yes, then step forward. If not, wait. Patience here is vital because the first move after a signal often fools the impatient. The real signal is in the follow-through, if a breakout holds for several sessions, if volume expands with price, if reactions are shallow, that's confirmation. When a move is real, you'll feel it. The crowd begins to chase, and yet the price refuses to give much back. That's strength. That's the market telling you, I'm ready. Step 3, synchronize with the general market. The third step, and one most traders ignore, is synchronization with the general market trend. You can find the strongest stock in the world, but if the overall market is against you, it will pull you down like an anchor. Never forget this. Individual strength rarely survives market weakness. During the 1929 crash, I shorted everything that looked vulnerable, but I didn't pick at random. I shorted the ones that fell. First, the ones that broke before the rest. They were synchronized with the general market weakness. Likewise, in bull markets, the best trades come from stocks that lead the advance, not follow it. Leaders reveal themselves early. They surge when others hesitate. They recover when others stumble. So before I bought, I asked, is this stock moving in harmony with the general market? If the market was up and my stock was also strong, it passed. If the market was uncertain and my stock still surged, it passed stronger. But if the market was weak and my stock couldn't rise despite effort, I waited, because no man, no stock, no theory can fight the tide of the market forever. You see, synchronization is about probability. You can fight the crowd and win once, maybe twice, but you cannot win consistently by fighting the collective direction. In trading, probability is everything, and probabilities favor the aligned. So I never bought against the trend. I bought with it at the moment, when both my stock and the market moved together like dancers in rhythm. That's when momentum becomes conviction. Step 4, the test of reaction. Here's where most traders lose patience. They see a move, they see confirmation, and they rush in. But I never bought at first strength. I waited for the reaction. After every advance, the market pauses, it breathes, it tests conviction. That reaction tells you whether the move was real or merely emotional. Here's what I watched when a stock breaks out and then pulls back slightly. That pullback is the test. If it falls slowly, on low volume, and then turns upward again, that's strength. It means the weak hands are gone and the strong are holding. If it falls sharply with heavy volume, that's weakness. It means the insiders are unloading, not accumulating. So I waited for the reaction before every buy. I let the market show me its hand. Think of it like poker. The reaction reveals who's bluffing. You modern traders call it the retest, but it's the same principle. I called it the test of reaction. It's the moment the market tells you whether the move has power behind it. And I only bought when that test proved strength. So the fourth question was, has the market tested and held after a reaction? If yes, the move is real. If no, it's a trap. In 1928, before the great crash, I saw stocks that had been strong for months suddenly fail this test. They'd rally, pause, and then instead of stabilizing, they'd collapse on the next decline. That was my cue. I stopped buying and began shorting. That single decision saved my fortune when the rest of Wall Street burned. Because every great collapse begins with a failed reaction, and every great advance begins with a successful one. You don't need prediction, you need observation. So, Remember, don't buy the first rise. Buy the rise that survives its first fall. Step 5. The final proof. Volume, behavior, and conviction. Now, the final step, the most crucial of all, the one that separates professional judgment from amateur impulse. Even after a stock passed all 4 tests, I had one last question to ask. Do the volume, behavior, and conviction of the market confirm that strong hands are in control? Because make no mistake, the market moves in waves of manipulation and conviction. Volume is the footprint of intention. When volume expands with price, the crowd is joining the move. When volume contracts while price holds steady, the insiders are holding. But when volume vanishes and prices drift aimlessly, the trend is dying. So I watched for conviction, not in words but in behavior. If the price advanced steadily, with orderly pullbacks and no panic in either direction, I knew the professionals were in charge. If prices spiked wildly, I stayed away because professionals don't need drama to make profits. I wanted quiet accumulation, not chaos. That's what the 5th step was about, identifying control. When the strong hands accumulate, they do it quietly. You'll see volume increase on up days but never collapse completely. On down days, that's conviction. That's your proof. And when all 5 steps align, the market is in your direction. The price confirms with action. It's synchronized with the general trend. It passes the reaction test, and the volume proves strong hand control. Only then do you buy, not before, not after. That's the perfect entry. Not because it's magical, but because it's logical. Because by that point, the market has already told you what it wants to do, and your only job is to listen. I never chased prices. I let them come to me, and when they did, I acted instantly, because the decision had already been made in advance. That's the secret of the 5-step test. It's not about predicting movement. It's about waiting for alignment. Market to prove itself. Most traders today can't do that. They mistake activity for progress. They think movement means opportunity. But in truth, profit belongs to those who can. Wait, you can't force the market to reveal itself faster than it wants to. Your job is to prepare until it does. Now, let's talk about the real enemy, emotion. Fear and greed are the same. Demons that haunted the ticker rooms of my time. You feel them today through screens. I felt them through the tape. Fear whispers, don't lose what you have. Greed whispers, double it before it's gone. Both are liars. The moment you act on emotion, the market owns you. That's why my test wasn't just a method, it was armor. It forced me to slow down, to earn each trade instead of chasing it. So when the market tempted me with early breakouts, I waited for the reaction. When the crowd panicked, I stayed silent. When everyone wanted action, I wanted proof. The 5-step test wasn't about finding certainty. It was about building patience until certainty revealed itself. Understand this. The perfect entry point isn't about prediction. It's about readiness. The perfect moment isn't when the price turns. It's when you stop doubting. When your plan, your patience, and your preparation align. That's the true signal. Not when the candle flashes green, not when Twitter says buy, but when your tests are complete. Only then do you act. Discipline doesn't mean inaction. It means delayed action. Action reserved for the right conditions. When all 5 tests align, the trend is in your favor. Price confirms through action. The general market supports your direction. The reaction proves strength, and volume confirms conviction. You don't hesitate. You strike, not with hope, but with clarity. Because hesitation after confirmation is as fatal as acting before it. You see, patience and decisiveness aren't opposites. They're partners. Patience prepares you. Decisiveness pays you. The market rewards those who wait and then act without hesitation when the time comes. That's the balance I spent my entire career mastering. I learned it the hard way through loss. In 1907, I made millions by following my rules. In 1915, I lost them by breaking them. The difference wasn't the market. It was me. You can't control what the market does. You can only control what you do when it moves. Every trader wants control, but real control doesn't mean forcing trades. It means mastering yourself. While the market tests your patience, and believe me, it will test you. It will tempt you with false signals. It will reward your bad habits once just to teach you pain later if you want to. Survive, you must build habits stronger than temptation. The 5-step test was my safeguard. It protected me from myself. It reminded me that waiting is not weakness, it's strategy. After every victory, I humbled myself back to step 1, because success can intoxicate faster than failure can humble. When you win big, the market whispers, "You're invincible, go bigger." That voice destroyed more traders than any bear market. After my biggest wins, I traded smallest, because that's when the danger was greatest. Not in losing, but in believing I couldn't. Humility is your final defense. If you treat every trade as if it can be your undoing, you'll stay alive long enough to thrive. Let me tell you one last truth. You don't trade the market. You trade your behavior. Charts are reflections of emotion, yours and everyone else's. The crowd acts out of fear. You must act out of logic. The crowd seeks excitement. You must seek confirmation. When your behavior becomes disciplined, your results become predictable. The market will always move in cycles. Technology will change, assets will change, but the psychology, it never does. The same emotions that drove ticker traders in 1907 drive digital traders in 2025. That's why my lessons endure, because I didn't trade stocks, I traded human nature, and human nature never upgrades. So the next time you open your chart, don't ask, where should I buy? Ask, have I passed the test? If not, close your platform. If yes, step forward with conviction. That's the difference between gambling and trading, between guessing and knowing, between chasing and waiting. The perfect entry point doesn't belong to the fastest trader. It belongs to the patient one. You want my secret? Here it is. The market always gives one last chance to those patient, enough to wait for it. Let the amateurs rush. Let the crowd react. You prepare, observe, confirm. Because when you master waiting, you'll realize something profound. Waiting is a position. If you found meaning in these words, share them with a trader who still chases the noise, like the video if patience has ever saved you. And subscribe, because next time I'll show you the opposite side of the coin, how to exit before the crowd even knows the move is over. Until then, trade well, trade wise, and never forget the market rewards patience, not prediction.